our first question comes in from AMS. AMS says, I am a user of the tool mainly for iron condors. What are the best iron condor search criteria for a weekly iron condor? In my opinion, it's the same as it would be for any other iron condor. Meaning, AMS, when I look at an iron condor position, let's go ahead and add that in. I'm going to look for a good probability between, a good range out of the money, a good percent probability between, perhaps even still use a good probability above the short put strike price and below the short call strike price. Save that configuration, go to Iron Condors. The Iron Condor is a combination of a bull put credit and a bear call credit spread on the same security. When I'm looking at any bull put or bear call, I myself tend to focus on a probability range of 85% or more probability of success, meaning that the stock has an 85% theoretical probability it's going to be above the short put strike price, or an 85% probability it's going to be below the short call strike price, to where that spread would expire worthless when we make the full profit. So if I'm using a weekly, I'm looking for almost the same thing. I'm going to focus on the probability. You can, of course, focus on delta. Our defaults here, weekly iron condors. This would be my starting point in this scenario. All right, so what I did here is the default criteria. There's more than 600 results. We're going to clean that up in just a second. So it looks like a lot that we have here, AMS, but this is how we would start. First, we want to set our days to expiration. All expirations 2 to 10 days out in time. Looking for a minimum net credit of at least 25 cents. 5% out of the money for the short call and the short put. This percent out of the money range, I'll explain that in a moment when we pull up a profit and loss chart for one of our iron condors. It's more related to how far each of the short options are from the current stock price. So a percent out of the money range of 50 means that the short call and the short put are equidistant from the current stock price. You don't have a skew going bullish or a skew going bearish. If you have wanted to trade iron condors, AMS, and you're more bullish on the market, you might want to have the bear call credit further out of the money to allow more movement in that direction. And of course, if you're bearish on the market, you might want to do it on the other side, or just enter the bear call spread or the bull put spread, of course. Now, we're limiting the bid-ask spreads to be less than 50%. Okay, so we don't want too wide of a bid-ask spread in this position. Now, this initial one is looking for a percent probability above the short put break even, not the strike price, which I might look for in a bull put, but the break even, which is including the initial net credit in. Let's bump up some of these numbers. And it doesn't seem like a lot, but we're going to bump this up to 75 to start. And we're going to put our probability between up to 85% as well. Just try to narrow down some of this list here. Okay, let's make it much higher. I'm going to leave the probability between 85. We're going to go 85 with these two as well. Try to narrow down those numbers. Jeez, can't win, can I? That's quite all right. So we're going to do another change in a moment. As a base ground rule, what we want to look for is at least some volume and some open interest. Depending on which strategy you're doing, which structure you're doing, you might want to move this up. Our general rule of thumb, Ernie's and myself, in any strategy, is what you usually want to look for is an open interest maybe 10 times the average number of contracts that you're trading, and a volume at least 5 times. So if you in general trade, let's say 5 contracts of an iron condor position, I might look for an open interest of at least 50 on the call and the put, and a volume of at least 25 contracts, at least for the sell option. Maybe a little bit less for the buy, but at least for the sell option. So that 5 and 10 times AMS, that's generally what we look for. I can't believe I have these too many. Let's bump up the return to 10. That should give us some value. And yes, usually if I'm doing a 1 or 2 week out bull put credit spread, yeah, I'm looking for 9, 10, 11% return. 2 weeks out, I'm looking for 14, 15, or 16% return AMS. So going up to 10, that really did what we wanted to. Now, what are some of the other criteria we might be using? Well, we're looking for a beta of less than 1.25. I know that a lot of people like to trade iron condors with higher beta stocks and stocks with a higher implied volatility. Well, they have a higher implied volatility for a reason. They have a higher beta for a reason because they tend to fluctuate more often. This is a neutral position. So we're going to go ahead and say that I don't want movement. I love the movement because it gives me the higher premium, but I don't want to get stuck rolling those positions. Okay, I don't want to get stuck with something that's fluctuating and I'm moving the bear call side because it had a run up for the first 2 days and then it had a collapse downwards and now I've got to manage the bull put. I want something more neutral, stable, and common. Boring, but not too boring. I'm not going to just trade IBM or things of that nature with a stock volatility of 0.12 or 0.13. I want some volatility, but I don't want it to be out of range too much. And of course, we're going to avoid earnings between now and expiration. Now, we're also looking for a Bollinger Band, the percent bandwidth less than 50. We'll show you that in a minute when we look at the chart. But this gives us some common ones. Some of the ones might be a little bit concerning here. Meta had a big drop today, 9 points. Baidu had a big run up today, relatively, of 8 points. But, you have Microsoft, Adobe, not Coinbase, ExxonMobil, First Solar, Wells Fargo, questionable, Visa, they're still there as well. But we've got 32 results. This is a reasonable mix of positions. And what are we looking at here? Probability of 86, 87% between, 94% above the short put, 89 below the short call as well for the probability. Returns, the double-digit ranges, as we mentioned, 16 to 20% on the first page. We're sorting by highest percentage return. You could sort it by highest probability if you wanted to, AMS as well, in order to take a look at that. Now, first things first, let's just look at the stock chart, say, for JPM. I know it's been kind of all over the place, too. And this is not a great example. The Bollinger Band is still within its 50% bandwidth, but it's had that large pull down. So we might want to change something here to avoid those positions. Let's check out Texas Instruments. It'll be probably a better example to use. All right, that's what I'm looking for. So what I have selected on my chart for technicals is the Bollinger Bands. That's what you see here. The MACD down below. RSI is shown in there as well. And you see it hovers just around this, 35 to maybe 60 range, maybe 70 range. So it's not going too wild. That's kind of what I want. And of course, we're looking at the SMA 20. That percent Bollinger Band of less than 50 is showing us, it's referring to this, the width in the range between the Bollinger Bands compared to where it has been. Hard for me to believe that JP Morgan was only less than 50% because of that wide gap down we saw where the Bollinger Bands were up like this. But I'll take a look at that. We can take a look at that in a moment too. But I want something kind of in this range where we can kind of see, okay, 168 was kind of a recent low, 185, 186, let's call it, was sort of the recent high. What were our strike prices on the search for the weekly spread in Texas Instruments? The short put at 165 and the short call at 185. So right around that breadth, almost we could call it 2 standard deviations, close to it, roughly, but we're pretty close to that range. And just based on using the probabilities AMS, we sort of picked the support and resistance that we've seen recently in the past month, right? Going back to February 1st there when we were near those highs of 185, 186, that's the short call strike price. Let's get back up, there we go. And 165 down here, that's where the short put was as well. So my suggestion, use the defaults as a stepping stone. Yes, increase the percent return AMS to the targets that you want. Adjust the probability, push those numbers higher, maybe as much as 85 and 85 for the probability below the short call break even and probability above the short put break even, keeping the probability between of 85. Keep the earnings to avoid earnings between now and expiration. I'd keep the bandwidth in there. And of course, I like to use the beta of less than 1.25 to see something that's not too fluctuating. As you can also see, we're removing leveraged ETFs, anything that's 2x or 3x bullish or bearish because of the fluctuations in the movement. Okay, so that's what we're going to do here. That's what we want to try to avoid in those situations. We are in a neutral position. We don't want a lot of fluctuation. Yes. Oh, sorry. Trading this Iron Condor, not a recommendation or suggestion, but it is a high probability trade, only 7 days out in time. If you can place it on Monday, it'll be 5 days out in time. That's what we're going to be looking for. We're, as I said, that percent out of the money range, we're just about equidistant. Stocks at 175, selling the 165, buying the 185. A little skewed, it's really closer to 176. Not too much, though. We're equidistant apart. It's not skewed one direction or the other. That's that percent out of the money range, 45 to 55%, 50% being equidistant from those prices. Okay, so that's something that you, again, let's just review real quickly. Use that default that we had, the weekly Iron Condors. Make some tweaks for your requirements. Okay, you don't want it something to be greater than 10. I'm sorry, my apologies. I mean, you wanted the probabilities to be up at 85 and the percent return, put it to where you want. You could even go as high as 15 as you want, as you need, Amos. Now, remember, when you search on Monday, some of these same positions might show up, but the return might be lower. We're technically going to lose 2 days of time value decay when we open on Monday. And of course, if the market opens in any kind of turmoil on Monday, it's going to be different. AMS follow-up question as we went through this. AMS says, great, what about the RSI and MACD for the Iron Condor? I typically don't use the MACD for this strategy, okay? For me, the MACD is more if I'm getting into a new married put as I did today. I'm looking for something that's been above, has a positive MACD cross signal of at least 2 days or more. Same thing I look for in the bull put credit spreads. But see, I don't want a really big bullish mover that I would look for buying a long call or a married put position. I'm looking for something more neutral. I guess I could say for any suggestion on the MACD is I might want to see one where the MACD is positive, where it's above the divergence line, excuse me. But MACD is more defined looking for crossovers. That's how I use it anyway, is more defined looking for crossovers in those situations to indicate a bullish or bearish movement, a shift in the price movement of the stock. I don't really want a shift in the price movement in my Iron Condor. I want it to be as stable and neutral as possible. Now, as I mentioned with RSI, you might want to look for a range, maybe somewhere between, let's say, 40 and let's say maybe 65 to the upside, so maybe even 35 to 65, somewhere in those ranges. You could even go 40 to 60. I'm just afraid that might be too restrictive, but let's try it out and see what happens. Okay, so I knew Texas Instruments was going to be in there because we saw it. And we saw where the RSI was. It was right around that 50 range, a little bit up, a little bit down. But those others are outside of the bands. So maybe that is too restrictive. Maybe I want to bump this up to 65 and 35. It's still a reasonable range. No, it's still the same too. So let's take a look at Airbnb's chart. And we know we're going to see something similar. So it's had a little dip recently. It does have that negative MACD crossover, though, as you see. It's still positive above the divergence line. And then this one's here. Personally, this movement here that we're looking at for the Iron Condor trade, I don't know. Maybe I prefer the TXN chart better for an Iron Condor. Not, again, a recommendation or suggestion to make that trade on Monday. I'm just saying that I want something more neutral and stable. So we're looking recently about 142.50. Let's just call it 110-ish. What were our strikes that came up in the search? 108, good for the short put. 130. Okay, maybe not as high as I would like it, but it is offering a 13.4% return on the position. As I mentioned, 130 is kind of, that's not too bad, but it's a little close to where it just was recently before this pullback. If the market goes bullish next week, then it might be threatening your 130 strike potentially. It's potential. not guarantee. Of course, it could also keep pressing the downside as well. It's hard to tell there. All right. So I don't typically use the RSI and the MACD for this particular strategy. Best suggestions I could think of is the RSI range here. May want to see a MACD that's positive, just meaning above that divergence line, that it's not going into the negative where you start to get into choppy waters sometime as the stock's trying to fight to come back, but it's got pressure on it, selling pressure on it as well. Again, let's just take that out and leave our 35 to 65 RSI, and we get some much better results. Baidu, Visa. Hey, SPX is in there too. We're not filtering out the indexes. We're just filtering out the leveraged ETFs. Home Depot's, Lowe's, Target, that's been in a range recently, I think 155 to 165. So we're looking at the 150 strike and the 170. It's pretty good. And Costco, I haven't been watching recently. I know they had earnings, was it last week or earlier this week? These are the types of companies, larger companies, that unless there's a large, unexpected black swan event, you don't expect to see too many moves. Question comes in, where's Tesla? Why not just do something with Tesla or just a single stock? Well, so that's the power of the search tool. It's showing me the positions that match what I want to see for what I think would be my comfort zone for an Iron Condor position. It doesn't have to be yours. Now, AMS, if you wanted a higher return, you wanted to look for weekly positions that are up in the 25, 27% return range, you can easily plug that in. But what you're probably going to have to do is lower the probabilities to see the results that match that. I'm not saying that you would ask that question, but the other comment that came in about Tesla, hey, higher volatility, higher return. We talked about in the beginning, we're looking for a beta of less than 1.25. Tesla might not be matching that. Sure, it's going to match the return. Sure, they're going to have a spread that matches the 86% probability, but is it matching what we wanted for that Bollinger Band range and that RSI that we just put in, as well as the probability and the beta requirement that we're looking at for more stable stocks? That's my thoughts on that. I have tried to, I'll be honest with you real quick, AMS, I have played around before with trying to use the percent BB20, where it is in relation to the upper Bollinger Band, a percent Bollinger Band 20-day. If we have 100% BB20, that means the stock's currently trading right at the upper Bollinger Band. And 1 of 0 means it's right at the bottom. So I played a few years ago trying to play around with different numbers similar to what we talked about with the RSI, making it 35 to 65. So it was between the Bollinger Bands, not on a strong run up, not on a recent decline down near the bottom of the Bollinger Band. 40 to 60, 45 to 55. And it just turned out that it didn't help as much as I thought it would. I couldn't find a sweet spot where it targeted and took the success win rate up to, say, 95, 96, or 97%. I couldn't find that consistently. But it was also a bad market time to be doing it. So that's sort of the situation. I'm talking about after, just before the 2020 pandemic, right around the mid to end of 2019. And then again, later on in 2021, that was a better time for the Iron Condors as things sort of stabilized before 2022 hit naturally. And that's what made those positions difficult. You could find great credits, but the stocks were wavering around too much.